Hey guys, welcome back to BK Trading Academy. I'm Brian Horton, professional trader, owner, and educator. And we're going to talk about one of the easiest plug and play indicator strategy that I've ever come across. I'm going to show you step by step by only using two indicators. And there's actually a video that I've posted about this previously. It's been some time, but we've grown a lot and we have a lot of new people who haven't seen it. And so I want to reintroduce it to you. And I'm saying it is really simple. This is a strategy that I've used before early on, and I think is highly beneficial. But once you start understanding price action and technical analysis, you can use these indicators just as confluence, simply meaning confirmation. So let's go ahead and get right into it. You don't want to miss it. I want you guys right now to like and subscribe if you haven't already. And by the way, if you're looking for hands-on mentorship, we currently have $400 off of our lifetime enrollment membership. That means you get to be with us for a lifetime, and you're going to use that promo code. Just go ahead and click the description below and look at our BK Trading Academy, and you'll see all the details on our website. So guys, let's go ahead and get right into it. You guys are in for a treat. All right, guys, so I want to go ahead and try to get this done as fast as possible because I think that you can benefit with this as soon as possible. You can implement this in your trading strategy, or if you don't have a trading strategy at all, I think this will definitely help you out. So very first thing you want to do is you want to incorporate two different indicators. So one, it is the EMA, and we're going to look at the 5, the 8, and the 13 day. Okay. So depending on the trading platform you have, you will go to your indicators, right? Specifically TradingView, and you're going to type in EMA space, right? And then it's going to be 5/8/13. That simply means 5-day moving average, 8-day moving average, and 13-day moving average. Okay. And once you do that, it will look something like this here. Okay. You'll see 3 lines. So you will see the 5-day, which is red. You will see the blue, which is the 8-day, and then the 13-day moving average is usually the last one. Okay. And then secondly, you want to incorporate the parabolic SAR indicator. And it looks like this here. You're going to go to your indicators tab. You're going to type in parabolic. So PARABOLIC SAR. And it looks just like this right here. All right. And so once you go ahead and click it, then it will look something like this. And you will see these blue dots over it. So you can make it bigger, you can make it smaller. And what I mean by that, if you go to your parabolic SAR settings, you'll go to style, and you'll click this here, and you can make it thicker. So you'll see these SARs kind of get bigger, right? So that is highly important just so that you can see it, because that's going to tell you which trend direction you're in, and it's going to help you with your entries, okay? So we have those two things going. So remember your colors here. When you go to your settings for your EMA 5, 8, and 13, your settings, we have your 5-day at red, your blue at 8-day, and then green is 13-day. So typically what you want to see happen is you want to see your 5-day and your 8-day cross your 13-day. And when it does that, that's signaling an uptrend. And right when you see it cross, 9 times out of 10, you want to go ahead and enter your trade right then and there. So let's go ahead and zero in on this here. Okay. So we see the 13-day here, the green, and let's go ahead and zoom in just a bit. We have the 13-day there. And then we have the 8-day and the 5-day. And we can see the 5-day coming up. It crosses the blue, and then the red crosses the green as well. When you have those two crossing the 13-day, then you want to enter for a buy in that case. So we're going up. Once it crosses, you want to buy. And before you buy, you also want to throw in your parabolic SAR, which is these blue dots here. And when you see it underneath price, here's price, these candles, when you see it underneath price, that also signifies to buy. So you would buy literally right here when it crosses, okay? So once you go ahead and buy, it's completely up to you for how long you want to stay in the trade. You can couple this with price action. You can couple this with technical analysis, or you can simply exit whenever you see it cross the opposite way. So this is what I mean here. I'm going to get my measuring tool. And let's say you entered right when it crossed and it continues to go up. I'm on the daily time frame, and you can see right here, I'm already at 229 pips, and look how far it went, right? So each candle represents a day. You can see it start pulling back, and then it crosses to the downside right here. You see the red and the blue cross the green, and you can exit there. That's a strategy. Now, this is a swing trading strategy and also position trading strategy, the higher the time frame you're in. So I'm on the daily time frame. It took me 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. So about 23 days to get out of that trade. And remember, I'm on the daily time frame. You don't have to stay that long. It's completely up to you. But let's measure from where it first entered all the way to when we exit, 306 pips and 20 something days. That's not too bad, right? When you can also enter in other trades doing something else or doing the same thing on other pairs. Another thing you can do is exit with using price action or technical analysis. So you want to look for the next move or next resistance zone. So I can spot this point right here and say, right here, I want to exit if price gets to this area. I think this is a nice resistance zone here. So if you were to buy right when it crossed right here and exit it right here, that would have been 243 pips in just 1, 2, 3, 4, 5, 6 days. So just less than a week. So that is an awesome swing trading strategy. Okay. So the lower the time frame, because this works on every single time frame, the lower the time frame, the faster you plan on being in and out of the trade. When you're in a higher time frame, you may have some pushes and some pullbacks, and you may see your price go up and down, but you know that you're still in the best trade and you're going to be in there for a few weeks, sometimes even a month, depending on if you're a swing trader or a position trader. But let's go to the 30-minute, for example. We're going to use the same exact strategy, and we can see how fast you can get in and out. All right, so let's just pick this area right here. We see the red and the blue cross the green. So I'm going to mark that right here. It's right behind that candle. Price goes upward. We see our parabolic SAR right under the price. So those two indicators are telling me to enter into the trade. So let's say I got in right here. I get in at the peak. And let's say my strategy is I want to get out when I see the red line or the red EMA starts to pull back. So if you get out right here, that's about 16 pips. And that's only in about 1 hour. Okay, 1 to 2 hours or so. So again, the lower the time frame, then the faster you plan on getting in and out of that position or in and out of that particular strategy. So of course you want to do this during the right session. So if you're trading the New York session, you want to use maybe the US dollar versus the yen, or you want to trade the GBP if you're trading the London session. So you want to trade this strategy during the most volatile session, depending on when you're trading it, right? And then your stop loss, you just want to make sure your stop loss is hit outside of structure. So if you don't quite understand price action and technical analysis, I really suggest you to look at our free course. I will put it right here, right above, so you can see our free technical analysis course, and it covers all the way from defining a candlestick all the way to advanced strategies. I want you guys to save that in your playlist as well. But guys, that is it. Just 2 simple indicators. I think you can become profitable with that, especially if you struggle finding support and resistance zones. You don't quite understand. Everything looks like a blur, and you don't really have mentors like us to really help you define price action and technical analysis. I think that this will be a perfect strategy for you. Now, if you need your handheld, again, I want you guys to look in the description below. We have $400 off of our lifetime membership course. That means you're with us forever. You're not pressured to complete your work at a certain time. It is at your own pace. We equipped you so that you can become a profitable trader on your own, right? That is our job, is so that you can become profitable on your own. We will hold your hand in the meantime. We trade daily with you guys during the New York session, 3 days out of the week. Also there 24/7 to answer your questions through our private Discord community. So guys, let me know if this is helpful for you. Give me some love, subscribe if you haven't already, and hit that notification bell so that you can see videos just like this every single day. I really appreciate you guys for watching, and you guys have a blessed day. To the next video.